The top business stories live from the Sky News City studio. Retail sales fall to their lowest level since the COVID lockdowns of 2021. Nationwide Building Society says there are signs that cost of living pressures are starting to ease as it reports a big rise in profits. Plus, the UK's biggest chain of opticians, Specsavers, calls for changing the rules to allow more home visits. I'll be speaking with its co-founder. Good morning, this is Business Live with me, Ian King. We begin today with some breaking news about the future of Manchester United. Our city editor, Mark Kleinman, has been in the running with this story right from the get-go. He's got the latest now. Mark, what have you heard?
Yeah, that's right, Ian. Another interesting piece of colour surrounding the future ownership of Manchester United Football Club. I understand that Sir Jim Ratliffe, the Ineos petrochemicals billionaire, is now close to finalising a deal to buy a 25% stake in Manchester United that will cost him roughly $33 a share. Now, the reason that's interesting, Ian, is that Manchester United's shares closed on Wall Street last night at just $18.43. So this would be a premium of over 75% to that closing share price yesterday. Now, of course, Sir Jim is only going to be buying a 25% stake. He'll probably do it through something called a tender offer to ensure that he acquires the correct number of shares. This deal will value Manchester United just under $6 billion, about $5.5 billion, which will make it one of the richest sports club deals in history. And as I understand it, in terms of the timing, Ian, there is a hope on both sides that a deal could be announced as early as Monday. That's not definite, though. It could slip by a couple of days, although I do understand that the Glazer family, who have controlled Manchester United since 2005, are keen to get this deal wrapped up before the US Thanksgiving holiday begins on Thursday. So the latest there in this almost exactly year-long saga surrounding the ownership of Manchester United. As I understand it, it will be announced next week that Sir Jim Ratliffe is acquiring a 25% stake in the club for about $33 per share.
Great stuff. Thanks, Mark. Now, UK retail sales unexpectedly fell last month to their lowest level since February 2021, when widespread lockdown restrictions were still in place. It suggests consumers may be drawing in their horns ahead of the Christmas period. Well, the Office for National Statistics said that retail sales volumes fell by 0.3% on a month-on-month basis. That was much less than the 0.3% increase that had been expected, and it followed a revised fall of 1.1% in September. On a year-on-year basis, retail sales volumes were down 2.7%, which was worse than the 1.5% decline that had been expected. There were declines in sales volumes in both food and non-food, as well as in motor fuel. Online was the only sector to report higher sales volumes during the month. Well, joining me now is Victoria Clark. She's UK Chief Economist at Santander Commercial Corporate Banking. It is called Corporate
and Investment Bank.
Corporate Investment Bank, yeah. A number of times we've had you on, I should know that off by heart by now, shouldn't I, Victoria? There was a lot of wet weather at the end of October. Was that a factor here?
I think that the weather's been a factor for months. We've had numbers sort of swinging up and down, but the tricky thing is that we've spent a lot of time trying to write off weak numbers because of the weather. So we had a warm start to the month, which I think probably didn't help because it meant people weren't out very quickly to buy their warm winter coats. And we had wet weather as well, so it meant that there wasn't as much footfall on the high streets. So I don't think that's helped, but I do think that digging beneath the numbers, there are plenty of signs there that households are just a bit wary about spending.
Yeah, I mean, but this does feel slightly counterintuitive in another sense, in that wages growth has been outstripping the headline rate of inflation now since July. You'd have thought some people might have a bit more money. Yeah,
so I think that's the positive bit of the picture, exactly. You know, inflation's fallen, wage growth is still pretty strong. But I think what was driving the stronger demand picture earlier in the year was the strong gains in employment. So more and more people coming into the workforce, finding jobs, getting these bigger pay rises. And that slowed a bit. I think households are warier about a few things. One, you know, the enormous interest rate rises that we've had, and that's obviously relevant for the mortgaged population. I think, you know, turning on the heating when the weather gets colder is important. higher petrol and diesel prices, and seeing the news that's around about the outlook for next year. So I think that there's enough in these numbers that makes me think, yeah, people are starting to spend a bit less.
What about the fact that we've had some really quite positive trading updates from some really big retailers? I mean, Next, Marks & Spencer, AB Foods, the owner of Primark, even Tesco and Sainsbury's, they all seem quite positive at the moment. How do we reconcile that with the numbers that we've had today?
Well, I mean, one thing I would say is that obviously, the strength of inflation means that what we look at in terms of those numbers is, sales boosted by higher prices, and that's one thing. These numbers, the headline figures we focus on this morning, are taking out the price increases and looking at the volumes, and volumes have been squeezed massively by inflation. One of my favourite charts is the retail sales crocodile, which shows if you have retail sales on a values basis rising quite strongly and adjust for inflation, and it's much, much more subdued. So I think that's part of it. I think the other thing is that that's got a bit more of a backward look, and this is starting to tell us what's happening now and where we're going. And I think that is a signal that demand is probably weakening, and that we'll probably see weaker numbers to come, not super weak, but a bit weaker over the rest of the winter too.
Yeah. Now, I mean, some people will say, well, hang on, a fall in retail sales, it stands to reason given that a lot of people are seeing big increases in their mortgage rates. But they're only a minority in the overall population as a whole.
Yeah, that's fair. I think it is partly about mortgage rates, and that is squeezing. As I say, I think the smaller gains in employment, I think, are important here, and I think that is related to the interest rate rises, because that's squeezing businesses, of course, as well, and dampening hiring appetite. So that's another version of how the rate rises hit the economy. And look, these broader things that people are looking at about petrol prices, the heating bills, which haven't been as much in focus over the summer, are all relevant now, and I think this is turning the dial a little bit over the winter months.
Do you think it's possible that some people have reined in their spending in September and October in order to have a bit more come the run up to Christmas?
It's, let's hope that that's the case. I mean, I'm seeing surveys and signals which are tending to point to the fact that people are going to be wary through to Christmas as well. But what you're seeing in these numbers, one of the things the Stats Office pointed to was that people are prioritising their spending. So there's more on food, less on the big ticket, non-essential purchases. So there may be a little bit being held back for that. Perhaps, something there about focusing on discounting. We've got Black Friday coming up, so that might tell us quite a bit about whether this is the new normal or just a bit of a wait and see. But I do think that those headwinds for households are rising, and we're going to see more of that interest rate impact of that biggest tightening cycle in independent BOE history hitting these numbers. OK,
Victoria, got to leave it there. Good to see you. Thanks for coming in today. We're just going to break into the business news very momentarily. Rishi Sunak has been speaking to reporters in the last few minutes about migration. Let's hear what he's had to say.
Well, it's incredibly important to me that we stop the boats. That's why at the beginning of this year, when I set out my 5 priorities, one of them was clearly to stop the boats. The first thing to say is we're making progress. People may not know this, that this year, because of all the things that we've done, the number of illegal migrants crossing to the UK is down by a third. Everyone told me that wasn't possible, but because we worked really hard, we're returning thousands of people to places like Albania. We've got the numbers down by a third already, but we're not going to stop there. That's progress, but I want to finish the job, and that means getting Rwanda up and running. I'm determined to do everything it takes to make that happen, and that means bringing forward emergency legislation that will declare that Rwanda is safe for these purposes. We've negotiated a new treaty with them, and we will make sure that domestic courts cannot block systemically our flights to Rwanda. And I've been also very clear that I won't let a foreign court stop us getting a flight off. That's my plan, and I'm going to work night and day to make it happen.
Aren't you just tinkering, though, with Plan A, and you don't really have a serious alternative?
No, as I said, the progress we've made this year on tackling this issue is meaningful. The number of crossings are down by a third this year because we're working with other countries to crack down on the criminal gangs. We've returned 20,000 people to places like Albania, and that's why the numbers are down by a third. But I don't want to stop there. In order to finish the job, we've got to get the Rwanda plan up and running. I will do whatever it takes to make that happen. People are sick of this merry-go-round. I want to end it. My patience is wearing thin like everyone else's. That's why our emergency legislation will make it crystal clear that Rwanda is safe for these purposes. It meets all the concerns that people have raised because of our new arrangement with them. And we want to stop any more domestic challenges to this programme. And I've also been clear that we won't let a foreign court stand in the way of us getting a flight off to Rwanda.
As the Prime Minister there, he's in Worksop today in Nottinghamshire, the gateway to the Dukeries, if you know it. Some other business news stories for you now. Nationwide Building Society said this morning that there are signs that cost of living pressures are starting to ease, although it warned that conditions for households were likely to remain challenging in the near term as the effect of previous interest rate increases feeds through and labour market conditions soften. The UK's second largest mortgage lender was reporting an underlying pre-tax profit of £1.26 billion for the 6 months to the end of September. That was up 29% on the same period last year and largely reflected an increase in the spread between what Nationwide pays savers and charges borrowers. Nationwide also benefited from a reduction in charges for credit impairments from the same period last year. Shares of First Group jumped by 4% earlier today after the bus and train operator unveiled a partnership with the Japanese industrial giant Hitachi as part of its bus fleet and infrastructure decarbonisation programme. Under the agreement, a joint venture set up by the pair will buy up to 1,000 electric bus batteries valued at around £100 million. These batteries will then be leased by First Group to install on its electric bus fleet. First Group said the agreement would save it £20 million in the current financial year and lift its annual earnings by £3 million a year by 2026. The pub operator Marston's said today it had replaced its chief executive with immediate effect. Andrew Andrea had been chief executive since October 2021, since when the company's share price has fallen by 61%. His successor will be Justin Platt, who's currently chief strategy officer at Merlin Entertainments, the resorts giant behind Madame Tussauds, Alton Towers and Legoland. Well, Marston's, which operates some 1,415 pubs and bars across England, Scotland and Wales, also said current trading was in line with market expectations. Now, nearly 3 million people in the UK would benefit from receiving eye care in their own home, yet less than a quarter of such home visits were made by an optometrist. That's a claim this morning from Specsavers, the UK's biggest chain of opticians, which is campaigning for a change in the rules to enable more people to benefit from home visits. Well, joining me now is the founder of Specsavers, Dame Mary Perkins. Dame Mary, good to see you this morning. The current rules require a so-called pre-visit notification before eye tests are carried out on people who can't leave their home. Why is that?
I've no idea why they're doing it, but it's a little bit of a barrier, because if I want to visit somebody in their own home and they know I'm coming and they know the name, they know the optometrist, it's a 48-hour pre-notification permission that's needed. And if I need to go to a care home and see more than one person, you're up to sort of 3 weeks waiting for this notification permission to actually go and see somebody in that care home. It never used to be like that, so I'm not sure what the ruling is, but it's a little bit of a barrier to going to visit people who are unable to access the eye care that they're entitled to. And I have to say, it only happens in England. Wales and Scotland have dropped these requirements. So please, England, would you drop it? It's a little bit of an extra work and a bit of a barrier there for going in to give the essential eye care for people.
And just to pick up on something you said there, Dame Mary, it can take up to 3 weeks to obtain one of these permits.
Into a care home where you may need to see more than one person. If you were going into a care home, you'd probably see 3 or 4 or maybe 5 people in the day. So that's a little bit of a length of time. I don't see what the requirement is. Scotland and Wales are not doing it, so why England are doing it, I'm not too sure. But it's a bit of a barrier. But we mentioned the numbers of people who are waiting to have their eye health checked in their own home for whatever reason. They're unable to visit a high street opticians, and they deserve the same treatment as anybody else. So we don't want barriers there. Absolutely.
I mean, who does one have to obtain these permits from?
Well, it's a government type thing in conjunction with the General Optical Council. So it's a little bit of a tick box affair, which I think could be dropped That's one barrier. But of course, the other barrier is people not knowing that they're entitled to eye care in their own home if they're unable to get out into the high street.
Absolutely. Now, you've been running these home visits for 10 years now. What proportion of your sales do they make up?
Do you know, I don't know that. It's all on the National Health, so I've not actually separated it out. I'm not so much saying a proportion of what it is. My problem is we need to see these people who are entitled to eye care, particularly the elderly. There's so many eye conditions that can be helped as you're getting older, spotted early on. So it's not just a matter of buying a pair of glasses. It's a matter of looking after the eye health and doing something about it for what people are entitled to. That's the main thing. So that's why I haven't got the figures to tell you, because it's not so much figures. It's the matter of looking after people and giving them what they're entitled to on the health side.
That's fair enough. I mean, when do people's eye... Is it possible to say typically when someone's eye health would deteriorate? At what sort of age it becomes a more pronounced effect?
Well, obviously, the things that people have heard about, so I won't go through a whole load of medical problems, but people have heard about cataracts, people have heard about glaucoma. For instance, glaucoma, that's to do with the pressure in the eye. This can be tested with a highly qualified optometrist in your own home. And if that is not right, it can be put right. If it's left, then you will lose your vision, which cannot be reversed. It's little things like that. I've used two things that people might be aware of without going into detail of everything. But eye care is very important as you get older. If you don't have your vision, you're liable to fall over maybe. Those figures are well documented by Age UK and their report. Little things like that, people turning up in A&E where they've fallen over, have to be put into hospital because their vision is not correct. Something has happened there. So they deserve the same equality as all of us watching in now. We can walk into a high street opticians, into Specsavers, have our eyes looked at. You need that if you're isolated in your home for whatever reason. We tend to think of the elderly, but of course it's right across all age groups. There are younger people who are unable to leave their home for some disability or other, and that's important as well, that they're treated the same as well.
Absolutely. Well, best of luck with the campaign day, Mary, and thanks for joining me today. It's good to talk to you.
Oh, thank you. Get your...
Still to come here on Business Live, we'll have a look at how the markets are going into the weekend. Don't go away.
That has happened within minutes, and now it's coming from both sides, and it's moving this way.
Only about half a mile from the Turkish coast, and it's evident that the boat seriously overcrowded. This is one of the most severe viruses in the world. I'm Alex Crawford, and I'm Sky's special correspondent based in Istanbul.
This is going to be the biggest party Tripoli has ever seen.
That's it. It got us then. There's a lot of action going on, a lot of hits coming in still. We aim to be the best and the most trusted place in news.
Clearly not had very much to eat at all. A lot of them extremely thin and very frail. Look at her arms. I can put my entire hand round.
This is the cocktail of drugs which the doctors at this hospital have been giving their coronavirus patients. Made for people who want clarity in an uncertain world.
Mother Nature can be vicious, absolutely savage. The world's largest falls now down to a trickle in places.
I can't imagine how much plastic is lying at the bottom of this huge lake. Whoa!
Close and personal with her, aren't they?
This is what makes the job so fantastic. I just took a shower above the clouds. You know why? Because this is the Emirates A380. Fly Emirates, fly better.
Well, a largely positive close last night on Wall Street was followed by a mixed session overnight for stocks in the Asia-Pacific region, as you can see on the screen there. Well, in Europe, stocks are in positive territory right now. All of the main continental European indices up by at least 0.75% and are on course to finish higher on the week. Talking points this morning include Volvo Cars, which has fallen by more than 10% in Stockholm after its majority shareholder, the Chinese car maker Geely, offloaded a 3.4% stake. Well, here in London, the FTSE 100 is also hurtling towards the weekend on a positive note, currently nearly 0.9% higher, also on track for a weekly gain. Leading gainers this morning include Land Securities. You recall we had the chief executive on the programme earlier in the week talking about his results. The shares up another 2.5% there as analysts continue to digest those numbers. And likewise, Halma, again, we had the CEO on the programme this time yesterday. They're up another 2.75% nearly this morning. Another gainer to mention is AstraZeneca. The shares up there by just under 1% right now. That's after US regulators overnight approved one of its breast cancer treatments. Outside the FTSE 100, well, the under-fire payments processor, CAB Payments, has rallied by nearly 6% on news it expects to hit this year's revised revenue forecast, while the defence contractor Babcock, they're up 2.75% after receiving a push from one of the brokers. They had decent numbers out earlier this week as well. On the foreign exchange markets, well, dollar's been on the back foot against the euro today and is on course for its biggest weekly fall against the single currency since July. As you can see, dollar off by just about 1/6 right now against the euro. Sterling up by a similar amount against the dollar, more or less unchanged right now against the euro. As for the oil price, well, that sold off last night to its lowest level since the 7th of July, but it's rallied this morning. A barrel of Brent crude will currently set you back $78.50 a barrel. That's up a little under 1.5% on the session. Well, joining me this morning in the studio is Sophie Lund-Yates. She, of course, is the lead equity analyst at Hargreaves Lansdown. Sophie, great to see you as ever. Why are the continental European markets, and indeed the FTSE, up by so much today?
Hi, good morning. The markets really can't seem to make up their minds at the moment. So as much as there's quite a lot of negative noise around at the moment, there are a few things that are helping to kind of buoy things as we go into the end of the week. And one of those is a note from Goldman as well that has suggested that interest rates are apparently going to cut in February, according to their estimations. Of course, that is not guaranteed, and we don't have a crystal ball. But there is growing optimism as well that we are actually this time looking at the end of the interest rate cycle hiking, which is, again, a bit up there, but could be coming through, and the markets are reacting quite positively to that as well.
Yeah, and I mentioned the retail sales figures earlier on in the programme, but what's been interesting to me is that a lot of the trading updates have been quite positive. Over in the US, they've had fairly lacklustre numbers, and we've also had some fairly cagey trading statements.
Yes, definitely. So really what we're seeing is really, really tough conditions, particularly for physical retailers. But in times like this, what you do see is that it separates the players out from the weaker to the strong. So, you mentioned Next earlier with your previous guest. They are consistently kind of a best in class there with what they're doing. And it's all coming down to those who are able to be nimble, react to style changes quickly, who are managing their inventory, all these kinds of operational things that you don't necessarily think about as a consumer. Because also, if you are strong on those sides of things, you also limit the amount of discounting that you have to do. And that really helps protect gross margin. And if you do that, you protect your profits as well. So that's where some of the trading statements as well are really, they sound quite surprising to the upside.
They do, but over in the US, of course, Walmart sold off by about 7.5% yesterday. It was all about the outlook statement.
Yes, definitely. So Walmart, we have to talk about Walmart in the context of retail. It's the world's largest retailer. It's a true bellwether for the entire sector. And what they've said is, as much as they posted really quite reasonable numbers for their quarterly results, the outlook statement for Christmas, the Christmas quarter, did kind of have a lot of caution in there. And the problem with that is that they're saying that, look, next quarter is going to be okay for us, but it's largely going to be driven by higher prices, not volume. And it's all coming down to the fact that people are reining in and not spending on that discretionary, those discretionary items, which is going to hurt them, especially when you look at the scale of their product suite as well. And they're right in the firing line for that, unfortunately.
And talking of discretionary spending, I mean, nowhere is the sort of chill being felt more than in the luxury goods sector.
Yes, of course, we had the Burberry profit warning yesterday, and the shares were down up to 10%. They have recovered a little bit of that now, but really luxury is seeing a cooling, as you say. So even higher end levels of consumerism, so the higher net worth customers are really, really pulling back. Particularly for me, the stark number that stood out for Burberry is the rebound in China isn't happening in the way that people would like it to. And there's been a really marked slowdown there. So certainly a lot to watch in the space. And those valuations are very high, which means they're being punished.
In fairness, Burberry aren't the only ones in this boat. LVMH, Kering, Richemont, which we were talking about this time last week, everyone's being affected by this. And it does seem to be the Chinese spenders.
Yes, so as you say, it's certainly not a Burberry-specific problem. Particularly the area that is being quite badly punished and seeing a lot of challenges, what they'd call kind of aspirational customers. So they are maybe newer entrants, newer shoppers in the luxury game. So maybe they're the younger cohort as well that are not quite as resilient as this ultra-high net worth customers. So it's that kind of the base level luxury, if you like, is where the pullback is coming from, and that is affecting a lot of the big names.
OK, Sophie, got to leave it there. Lovely to see you as ever. Thank you.
Thanks.
That's it from me. I'll be back in the afternoon at 4:30 with our next edition. Hope very much to see you then. In the meantime, do stay tuned. Coming up after this short break, it's Samantha Washington. See you later. Cheerio.